Hey, TGO traders, Wiz here with Thursday's market SITREP, and here we go. Higher, bust out the hopium, take a drag, and just enjoy as we go higher. Market obviously having a rip your face off rally, really over nothing. Okay, so yesterday, and let's take a look at a chart just of the S&P here. Yesterday, the Fed minutes came out, right? So the Fed chief came out 3 weeks ago and said, hey, thinking about taking my foot off the accelerator, not stepping on the brakes, but just taking my foot off the accelerator, kind of, sort of, maybe sometime down the road. World markets, our markets freaked out. And all his Fed lieutenants ran out to the microphones and said, whoa, everybody relax. He's just kidding. He didn't say what he meant to say. Well, what happened yesterday? Right here, as you can see, literally at 2 o'clock, the Fed minutes came out. And you ready for this? Here's the shocking thing. They said what they said, meaning they just kind of backed up what the spoken word was said. Hey, we're going to start thinking sort of maybe about easing in the fall or the winter, obviously data dependent, but we always stand by ready with our free money to drive this market higher based on no fundamentals. And apparently overnight, all the Wall Street drunks decided that, really game on. The Fed's not going anywhere, and here we go today, just having this rip your face off rally. And I got to tell you, the jobs report, the week jobs report today, weekly unemployment claims jumped. Just absolutely jumped through the roof here, up to 360,000. Well, that's bad news, Wiz. Well, exactly, but not in Bizarro market. Remember, we're in Bizarro market still. After the Fed chief shot across the bow of USS Market, I thought, maybe Bizarro market's over with. Maybe good news will once again be good news, and bad news will be bad news. Nope. We are now back in Bizarro market, where bad news, such as really bad unemployment claims, is good news. Okay, so again, pull your old trading notebook out, where bad economic data is good for the stock market. Okay, now remember that those two lines cannot be divergent forever. The stock market and the economy have to get back in sync eventually, and when it does, it's going to be absolutely painful. It's going to be World War Z, so to speak. But until that time, this is a hold your nose rally. We are going to go higher. You cannot fight $85 billion a month, and you cannot fight a market that just wants to go higher. But I will say this. Look at this. A rip your face off rally. Dow up 134 points, SPOO's up 17. The VIX is flat. That's a huge indicator right there that this is a rally that the market doesn't believe. So while they're buying with one hand, they're going and grabbing protection via the VIX with another. With a rip your face off rally like this, the VIX should be down 2, 3, maybe even 5%. It's not. That's very, very telling to us as options traders here at Top Gun Options. But again, hey, let's hold our nose and go higher. We're looking really great in our primary life trade brief model portfolio. I mean, look at our Japan position, up nearly 120% in 2 months, nearly $8,500 in profit in 2 months, as the Nikkei, as essentially the Japanese Fed, the Bank of Japan and Kuroda, more or less have maybe pulled this thing off. Obviously the Nikkei had the massive rally on Bank of Japan stimulus. Their market freaked the hell out when their Bernac said, hey, we kind of are going to maybe sort of pull the punch bowl away. Then they said, you know what, GDP's looking good. We think we can get airborne in this thing. Market freaked the hell out. And then the Bank of Japan held their fire and said, no, we really are going to sit on our hands. And look what the Nikkei's doing. It's rallying higher, up another 2% today. So our EWJ position is looking great. Good positions on housing. Our emerging market positions in Brazil are starting to turn around. Gold, just good stuff in our primary life trade brief model portfolio. Obviously, a $7,600 gain just today alone is looking pretty good. And, obviously $23,000 year to date. Nearly a 30% return in our model portfolio. Average hedge fund, folks, year to date, about 2%, and the market's up about, I think, about 14% year to date. So we're blowing the doors off of the markets in general. But be very, very careful, folks. I just answered a question from one of our traders in the ready room about, because I put a hedge on the other day. I put on a bullish double vertical on the VIX on volatility out to August. Okay. betting that volatility is going to spike between now and August. And one of our traders asked, well, were we too early with this hedge? No. Absolutely not. Let's take a look at a 6-month chart of the VIX. Every month for the past 6 months, there's been a freak out in the markets and a pop in volatility. Look at this. You can set your watch to it, and obviously here's the lead up to the Feds taking away the punch bowl, and then obviously the implosion in vol once the Bernanke said, "Hey, just kidding, we're not going anywhere." But it doesn't matter. Look at this. The previous 6 months, obviously here's where the Fed said, all right, punch bowl might be going away, and the market really freaked out. But look at this. All these months leading up to here have been hopium months. The Fed wasn't going anywhere, right? But look, each month, I mean, the VIX has spiked into the upper teens here, just shy of 20. So just because we're moving higher on hopium doesn't mean that we might not have a monthly freakout, especially as we get in the Q2 earnings season here. And as we've covered, this is the highest negative pre-announcement ratio since the first quarter of 2001, since my 13-year-old son was 1. That's not good news. So never feel bad about being early with a potential hedge. I'd rather be early with my insurance. I'd rather be 5 minutes getting my insurance than 1 minute late. You can't call Allstate when your car's wrapped around the tree. It's a little too late. Okay, so never feel bad about putting hedges on early. Get them on early and often, and you'll be glad you did. Okay, so we go higher, folks. Everybody hold their nose, enjoy the rally. But get ready for the music to stop, because eventually it's going to. You think the temper tantrum we had when the Bernanke said, hey, we're going to kind of sort of think about easing? What happens when they actually come out and say, all right, we're going to lower our purchases from $85 billion a month to 80 or 75, a drop in the bucket? The market's going to go into full freak mode. And if you don't have a chair or you don't have a clear, beeline to the exit door, you're going to get trampled. But here at Top Gun Options, that's not going to happen to our traders. Okay, got to run. Happy hunting. Make sure you hedge, and I'll be back tomorrow with the weekly wrap up over at wealthcreationinvesting.com. We'll see you.